Traders, what is going on? I'm excited to be with you guys today, but not sure you're gonna be not sure that's gonna be reciprocated. Today we're gonna be going over diamond hands, baby. I got a message for the diamond hands out there. I'm gonna be real with you, be honest, 100% straightforward. How else can I word that? I'm gonna be legitimate. I'm truthful. I love you guys. I want the best for you. So hear me out. All right, let's get into it. So for those of you who do not know, I'm Kevin Avery. Been trading for 5 years, and I'm a moderator. I sound like I'm in an AA meeting. Hi guys, Kevin Avery. Hi Kevin. Been trading for 5 years. Addicted for 5 years. There we go. Trading. Yes, I have been addicted. Okay, give me my 1 week chip. I've been trading for a while now. Seen it all, done it all, been it all, blew it up all, bought at the top, sold at the bottom. I've done it all, guys. I've done it all. That's why I'm trying to reach out to you, because I've been through the lows and been through the highs, and I want to carry the weight of some of this for you guys, because I've seriously been through it all. I feel like I can help anybody. I can relate to anybody as far as trading goes, because I've seen it all, been through it all, felt the emotions. I've bought at the top of the GMEs of the past and sold at the bottom. I've been the diamond hands. Oh God. Ugh. Okay. I don't know about that, but I got a message for you guys today for the diamond hands out there. The start of this year has been absolutely nuts. I've never seen anything like what we've seen since 2021 started, and it may be due to most traders just starting, like a lot of FOMO out there. We see FOMO, fear of missing out, left and right. And like I've said, human behavior never changes. You guys have heard that before. If you've been in the chat, the daytraderchatroom.com, that's where I moderate. I say it all the time. Human behavior never changes at all. People see something go up, they experience FOMO, they don't want to miss out, they buy it, and the stock comes down, they turn to a long-term investor, they cry, euphoria always ends in tears. Every single time you go deer in headlights. You were just looking for a little trade. I was just looking to capture a little bit of profit on GME, Kevin. Yeah, now I'm a long-term investor. I'm a bag holder, or what they call these days, the diamond hands. Traders, if you guys wouldn't mind, please smack that like button. It's greatly appreciated and really significantly helps out the channel. I'd love that from you guys. Back to the start of the year. So this year we've seen so many sectors hot and just taken off. Energy, COVID, electric vehicle, marijuana, bid price rule. So at the start of the year, we saw ACY and Bingo take off out of nowhere. Bingo, ACY, these were, penny stocks trending under $1. Now the thing is, in order to remain in compliance with the indice, NASDAQ, you have to be consistently trading over $1 for 6 months consecutively in order to remain in compliance. If you don't, guess what? You're getting delisted, OTC, pink sheets, that sort of deal. That became good news. It was almost like no news is good news. We saw these stocks just taking off. They would have no news to justify the price action. That's literally what the news would say. And it'd be like, okay, let's buy it. Diamond hands, baby. To the top we go. And then we saw AMC, GME, and these were highly, highly shorted stocks. You could go to Yahoo Finance under statistics, look at the percent of the float that's short. And for GME specifically, back in December, it was like 260% of the float was short. Of course, inevitably, this thing's going to get a short squeeze on it. AMC had about a 30% short on it. So at that point in time, it's like, okay, let's find the stocks that have a huge short percent of the float, and they're going to get squeezed. And then every single morning it became about electric vehicles, any kind of PR catalyst that had anything to do with electric vehicle. And then at certain times, it's like, okay, the lowest float stock on the board, 1 million in float. Not a lot of shares out there. We get a lot of people behind it. We can easily pump this stock up. And so we're going after sector after sector after sector. And that's what we've been seeing since January 1st. Guys, we've been flying through so many sectors left and right. It's just volume transitions from one stock to another. The important thing is, guys, you have to know what you're buying. There's a saying out there, buy the ticker, trade the ticker, not the company. I've heard this said before, fundamentals or fundamentals. It's a bad idea to ever fall in love with a company. I know you guys are going to hate me for saying that. Have you fallen in love before? Let's just use that as an analogy. Your judgment's clouded. You can't see things rationally. Your friends and everybody's trying to tell you this is a dumb idea, and you get dumped on eventually. It doesn't work out very well. Well, this is similar to people falling in love with these tickers, guys. There's so much FOMO and euphoria in the market, it's not going to end well. For instance, I shorted GME. I'm going to get a lot of hate for this. I shorted at 250. I covered some, 150-ish, covered the rest around 100. And I'm going to get a lot of heat for that. But the thing is, anybody who asks me, I told them what's happening. I don't know how far GME can go, but I know how the story ends. I've been doing this for a long time. Euphoria always ends in tears every single time. You never know exactly how overbought a stock's going to get, how much FOMO is going to come into it, how long it's going to get squeezed. And that's why you got to have kind of hot potato hands. You got to get in and get out. You got to know what you're trading. Are you looking for an intraday trade? You looking for a small window of opportunity to get involved, maybe on the long side with one of these tickers as it's experiencing that little squeeze or whatnot? Or are you looking to become a long-term investor? Those are two entirely different things. The saying is buy low, sell high, but for some reason, everyone wants to buy high and sell higher or hope higher. And you guys know very well, hope is not a strategy that's at least sustainable. I mean, you're not going to sustain yourself in the market if you're buying high, hoping higher. It doesn't work, but that's our emotions. That's our human behavior telling us, I don't want to miss out on this move. I don't want to miss out on SNDL, on these marijuana tickers, because Joe Biden got in office. Marijuana is going to be legalized. These stocks are going to go up. They're going to go up forever. Diamond hands, baby. Just understand emotions. As long as I've been trading, I do 3 types of analysis every day: fundamental, technical, and trader analysis. Fundamental, essentially what sector's hot. I'm looking for trades. So I'm looking at, is it in the sector that's hot? Electric vehicle, COVID, energy, marijuana. Are these sectors hot right now? Okay, this play can easily attract a lot of volume to it. If I wanted to become a long-term investor, that's when I'm digging into the filings, 8Ks, 10Ks, that sort of thing. But as traders, we're looking for opportunity. We're paid for the opportunity, not our time. 99% of the time, we're just kind of sitting there waiting for the stocks to come to us, not trying to force trades out there. We're trading our edge. And when it presents itself, we push the button. That's 1% of the time. We push the button when the trade presents itself. We execute the trade. We write the blueprint, and then we just build the house. We press the button. That's all there is to the trading. Pressing the buttons, but you have to have risk in mind. See, the diamond hands, they don't understand risk. They don't have a risk guide in mind. They're just saying, okay, I'm getting in, and I'm going to sell when this thing goes to the moon. There's no profit target. There's no risk guide. That's the main difference between gamblers and traders. And this is something I want you guys to learn, that if you're new to trading, gamblers, all they see is profit. They just go in there and spin that wheel, baby. Come on. Triple diamonds. Come on. That's all they're looking for. But as traders, we're inherently risk managers. We're hunters of volatility. We're managers of risk. So prior to ever entering a trade, we predefine our risk. Okay, if you do want to buy this SNDL or whatever up here and sell for even higher, at least have a risk guide. Don't just say, I'm okay if it goes to zero. I'm a long-term investor at this point. At least have a risk guide in mind. Know what you're doing before you get into it, because otherwise there's going to be so many people out there who are buying these stocks on up, and then they're going to go deer in headlights and lose a lot of money that maybe they didn't even intend to lose, or they didn't even consider it because all they could see were the profits. And then they're mid-trade. A lot of amateurs will adjust their risk parameters mid-trade. These are all things we want to avoid. We want to stick to our trading plan and trade it accordingly. Mr. Mark Twain said this, and I feel like it applies very well. When you're on the side of the majority, it's probably a good idea to pause and reflect on the decisions you're making at that point. Being on the side of the majority as far as trading stocks goes is typically it's not good. I'll tell you guys that. You have the 90% of traders and the 10% of traders, right? 10% of traders are doing what the 90% of traders are not doing. So when everyone's messaging me and saying, Kevin, never short again, GME to the moon, I'm buying up here at the top at 400 or 500, this thing's going to 1,000, SNDL, next stop $100, AMC, whew, short squeeze, man, this thing's going to be at $2,000 next month. Kevin, you're going to miss out. That's usually when I'm scaling a short position. But you got to understand, one of the most challenging things in trading is emotions. You got to recognize your emotions. The emotions don't go away in trading, but you have to trade the chart and stop trading your ego. Ego will get you in trouble every time. I've been trading 5 years, and in fact, I still got a note on my board that says, Kevin, leave the ego at the door. Your ego doesn't know how to trade. Trade the ticker. Don't trade your ego. Your ego is going to tell you, you can't be wrong. Well, guess what? You can be wrong, and it still be a good trade as long as you stuck to your risk parameters. That's what people don't understand. You can have a red trade, and it be a good trade. No one's going to be green 100% of the time. I'm green 70+% of the time. I recognize I'm red 3 out of 10 of my trades, so I understand the odds are in my favor. Similar to the house or the casino. They may lose big one day, but they understand over a month, 2 months, 3 months, 4 months of time, they're going to be consistent. I'm not going all in on one ticker and saying, all in, diamond hands, GME, AMC, SNDL, these marijuana tickers. It's not happening. I'm a trader. I manage risk. You got to understand that. Stop trading your ego. Stop trading these emotions. Stop emotional trading. You can actually take a bad trade and it be a green trade, and you learn the wrong lessons. Those are the most dangerous when you actually make money buying these stocks that are getting squeezed and go up forever. The black sheep of the market, they are anomalies that happen randomly, but maybe a few times a year. You make a lot of money on one of these plays and you think, okay, I'm a trader. I know exactly what I'm doing. And then you keep doing that month in and month out, and you lose everything that you made on that first initial trade because it was an anomaly. And it wasn't a good trade, but it was a green trade. So you can have a bad green trade and a good red trade. You have to understand that. It's the difference between process-oriented and results-oriented trading. To wrap up this video, I know I'm going to get a lot of heat. I already know that dislike button is going to be going off. So guys, if you appreciate it and got something out of this video, hit the like button for me, please. Hit the like button. Honestly, if I could put this whole video into one sentence, it's that. Trade the chart. Don't trade your ego. Love you guys. We will see you next time.